so that we can have a more meaningful dialogue. Okay. Um, and I will not wait. Don't wait for the finishing of the presentation. So in Pakistan, SECP introduced the Takaful rules in 2005, and initially the only dedicated Takaful companies were allowed to operate the business, and basically a window of 5 years was given to Takaful companies, to these dedicated Takaful companies. Yeah. And these early companies were Pak Qatar Family Takaful, Pak Kuwait General Takaful, uh, and Pak Qatar General Takaful, Takaful Pakistan, Daud Family Takaful. So these were the initial companies which got licensed in 2008 or 2007, and these were the dedicated Takaful companies operating in Pakistan at that time. Yeah. Uh, then actually the SECP introduced the window takaful's regulation rules in 2012. Basically, the 2005 rules were amended, and actually the new rules were, in fact, sorry, not amended. In fact, new rules were brought, and these rules allowed the conventional insurance companies to also operate their window business actually. Uh, then SECP issued the licensing guidelines in 2014, and these licensing guidelines basically prescribe the requirements and the manner in which the window takaful license to be given. Yeah, and then SECP issued takaful accounting regulations in 2019. Uh, and then after in the last subsequently, we also observed that more takaful companies are coming to Pakistan. And for example, the fifth takaful company, fifth pillar takaful company actually, it got licensed in 2022, and it is operating in Pakistan. Then Salam Family Takaful Limited got the Pakistan's first ever digital only Islamic life insurance, that is Family Takaful business. SECP uh, prioritized the sector in the 5 year strategic plan, and currently SECP is also pushing for the growth of the sector. Yeah. So now this is the brief history from the market players perspective actually. So there was a regulatory perspective and then the market players perspective. When the Kabul companies were given license in Pakistan, so obviously at that time the conventional insurance companies were giant actually. EFU, for example, Adamji, they were operating. Few companies were operating even before the independence of Pakistan, so they had large muscles actually. So it was really tough for the takaful companies to compete with these conventional players actually. Uh, Secondly, on the general takaful side, basically the business is more from B2B actually. You know, the retail market of the general takaful is low. So okay, the companies, when we talk about the B2B business actually, sorry. So the companies don't have much priority towards the you can say Islamic financial protection products actually. They were just interested in the pricing and servicing. So a company generally does not have any religion as such. So takaful companies were offering takaful, but it was not much priority of the corporate sector at that time. Then actually we have seen the growth in Islamic banking, and that is growth in Islamic banking actually has provided impetus to the Kabul companies, because when Islamic banking grows, so the need for the Islamic takaful is grows also, for their assets insurance, for their credit insurance, and many other type of insurances. Uh, when SCCP was trying to bring the window takaful regime in Pakistan, obviously the current dedicated takaful companies were obviously not in favor of that move. But anyhow, This was sorry, it was needed because the financial muscles of dedicated the couple companies were not much to provide the growth. Uh, Innovation in the couple sector. Uh, in Pakistan, SECP introduced the regulatory sandbox in 2019. Alhamdulillah, I was at SECP at that time, and I was the one who has rolled out this project, the regulatory sandbox. The regulatory sandbox, the basic idea was to promote the innovation, and under the regulatory sandbox, the regulator and the innovator both work jointly, and the innovators are allowed to operate in the market on a limited scale basis for a 6 to 8 months. And if that innovative idea is good and it's working fine, then the regulator brings the necessary regulatory framework. So in Pakistan, the digital takaful or digital Islamic insurance regime is the outcome of the regulatory sandbox. Because in the sandbox there was a company, First General Takaful Companies, that was set up by you maybe knowing the person Tahir Saab, who was the CEO of Jubilee General at that time. So he brought the idea of digital takaful as a in the sandbox, and since the idea was working good actually, so SECP then introduced digital only insurance framework in 2022. Then SFTL, the Salam Family Takaful Limited, got the Pakistan's first digital life Takaful license. So this also give impetus to innovation. Uh, then we have also seen innovation not only on the regulatory side, but also on the product side as well. For example, fifth pillar, the Kabul company, that more focused on Hajj savings plan actually. So earlier, the Takaful companies had issued saving plans, but they were not focusing on Hajj saving plans as a whole or overall ecosystem. So we have seen innovation on the product side as well in the Kaful when we observe the fifth pillar's Hajj savings plan. Uh, my company, Salam Family Takaful, introduced also, I think I would call it a first product with Jazz Cash. Uh, and that product was, in my opinion, it is the first truly digital saving product through the an interaction between the Kaful company and telco. Because earlier we have seen the interaction, or you can say collaboration between the Kaful companies or insurance companies and telcos, but that collaboration was primarily for the protection products only. uh, I would like to emphasize here that the Kaful companies or insurance companies offer primarily two type of products on the life side. One is the protection products, and second is the savings products coupled with financial protection. So the product which was offered by Salam Family Takaful and Jazz Cash was the Pakistan's first saving product actually. Yeah. Then we have observed 3 or 4 months back that another digital only insurance company has got license in Pakistan, which is the DigiPlus actually. So now we are witnessing that the digital focused insurance companies or the Kabul companies are getting license and doing business. Pak Qatar Family Takaful, which is Pakistan's largest Islamic life insurer, that got the VPS license, and that was, I think, the first license, VPS license, which was obtained by any insurance company, or particularly the Islamic insurance company. So this is also providing impetus on the entry of Islamic Takaful companies on the pension side. And subsequently, we have witnessed that the Kaful companies have also introduced, addressed the provident funds, the Kaful products as well. So earlier, this area was not touched by the insurance sector, but this area has been now been serving well by the Islamic takaful companies. Now, this is the takaful sector's snapshot, which has been taken from SECP's annual statistical book. Uh, there are four dedicated family takaful operators, and there are seven family window takaful operators. Almost every life insurance company in Pakistan has obtained the license as a window takaful operator, except I think Postal Life, which is the government's company. Otherwise, sorry, otherwise all takaful companies have got that license. And there are two dedicated general takaful operators, and there are 19 general window takaful operators. So you can see that basically overall the takaful sector is growing, and almost every insurance company has got the window takaful business as well. If you see on the premium side, the life insurance premium in 2024 was 434 billion. And if we see in the slide below, family takaful business, so family takaful business is 66 billion in 2024, which represents 15% of share market share in the overall life insurance business. And if you see on the non-life insurance side, in 2024, the total business was almost 243 billion, and the takaful sector has done a business of 31 billion in 2024. So this represents that the market share of general takaful companies is 13% by the end of 2024. Uh, so we have seen that the market share of the takaful companies have increased throughout the last 10 years, but in the last 2 years, it is from 11 to 13% on the general takaful side, and on the life takaful side, it is from 12% to 15%. So this slide gives you a brief of trajectory of the kaful companies, and when we compare it with the other Islamic financial services. This is from what 2017 2024. So Islamic banking, as we see, has increased from 15% to uh, actually 25% of the overall banking sector. And Islamic NBFIs, non-banking financial institutions, that is asset management companies, REITs, and IFS license holders, they have actually grown from 33% to 39%. Whereas the takaful sector has shown a steady growth, I would say, that from 9% to 15% over the last 6 years. So we are actually witnessing that overall the Islamic financial services are increasing in Pakistan, and they are likely to increase. We know that the verdict from the federal Sharia court and the vision of the financial sector regulators, particularly the State Bank of Pakistan and SECP. SECP is also on takaful side. SECP is also aiming that the conventional insurance companies should gradually convert into the Islamic takaful. And SECP has obtained a roadmap from every conventional companies, so that they should give a roadmap and business plan how that they are going to convert. So I think these initiatives will also strengthen the takaful sector. Yeah. Now these are the statistics of the on the family takaful side. The family takaful business, as we know, is that it is divided into two actually: private sector and then public sector. And when we say the public sector, that means that we include the State Life Insurance Corporation of Pakistan, and the on the life side, and the National Insurance Company of the government on the general insurance side, and Sindh Insurance and other companies as well. But this is only for the family the couple side. So we this means that we include State Life. So if we include in the public sector, we observe that the kaful is a very small part actually. It is just 0.4% if we include the public sector side. So because actually state life is a only is a largest public sector life insurer in Pakistan. State Life has also focusing on takaful, but since the company was formed in 1972, the huge portfolio is basically conventional. So it will take some time to develop the takaful within the State Life here. And when we observe the private sector side, the takaful is about almost 35%. So this shows that private sector companies are doing better on the cover side, because they are small and they are growing. And when we compare state life is a very huge, and the relative side of takaful, it will take time to grow. Yeah. And we gross premium side pay, if we include Sehat Sahulat, so the takaful contribution is about 6%. And on the group side, we say that the couple is 17% of the overall market. Yeah. Now this is actually, it is important to segregate whether to include Sehat Sahulat or not, because Sehat Sahulat is a state run public health insurance scheme. So that gives automatic enrollment to the policyholders. Next slide, I think, please. Yeah. This is a statistic from the takaful side. Now this shares actually slide shows the share of takaful contribution in the new business. In insurance on takaful, we don't just focus on the overall business as well, but one primary area of interest is the new business. What is the new policies have been issued? So the new business in 2023, the share of takaful was, you can say it's 27%, but in 2024 it has grown to 35%. And on the if we talk about this when you compare it to the private sector or public sector, so obviously on the public sector side, the takaful is in 2024 it was 4%. And the three it was 3% in 2023. I think next slide, please. Now this slide shows the statistics of the general takaful sector, share of takaful companies in each line of business actually. So on the fight side, we can see that the largest share on the general takaful side is on the motor side actually, because and there's a reason why it is on the motor side. The reason is that the kaful companies also need re-takaful support actually, as the conventional insurance companies. But due to the small size of the kaful sector, the re-takaful support is not great on the general takaful side. But motor is that line of business which needs less re-takaful support actually. So that's why the kaful companies are able to do more on the motor side. And when when we compare on the large insurance or the couple risks such as engineering risks, plant and machinery, and fire side, on that side more recoverable support is required. So that that's why we observe that on the fire side it is only 4%, and on motor side is 34%, marine side 12%, and again it is on health side. We see that in 2024 it is 34%. Now again, why the takaful share is more on the health side as compared to the side? Because on the health side there's a less need of retakaful, and on the miscellaneous side the market share is about, you can say, at 11%. So next slide please. Yeah. Now, as I mentioned that uh, SCCP introduced the digital insurance regulatory framework, and we have observed that two digital takaful companies have one digital takaful company and one digital insurance company has emerged, and they've got license. So what we actually digital takaful means specifically actually. So basically, we have observed actually that there's a gradual shift from phygital to digital actually. Now what is phygital actually? What phygital means that it's a hybrid of the physical and digital. So currently, we I have observed that many companies are doing actually phygital model basically. I mean, they have digitized certain processes, but few processes have not been digitized. For example, interaction between the agent and policyholder. So that is physical. So, when you talk about the digital takaful means that the customer's onboarding is digital. The communication between the takaful company and the consumer is digital. The other services such as policy endorsements, policy changes, and other changes in the coverage, they are digital. But remains one part remains physical, and that is the convincing part. The takaful companies have to rely on the, you can say, agents, or in other words you can say the advisors, the insurance or takaful advisors, because takaful or insurance selling is not easy. Okay, we don't much think about that what will happen to our families after our death. So after death, the planning after death is okay, is inherently low. There is still we need a person actually, an in-person interaction between these salespersons and the consumers, because that cannot be eliminated until I think the generation Z take fully charge of the financial sector. And because the generation Z and further younger generations, when they will come to they will get employment, and when they will doing business, so they are used to do basically transactions and purchasing through e-commerce, through apps, and they are not actually, they don't or they're not used to basically do through personal in-person calls. So when this generation Z and younger generations will take charge of the economy, so then we can say that there will be a truly digital insurance of takaful. But till that time, certain parts will be phygital and a few parts will be digital. So when we say digital, so in digital takaful, so customers communication or policy endorsements are digital. The claim process and policy withdrawals are also digital. But I think still these things means a very good service to consumers, because if you say, when we say traditionally, normally customers have to go to the insurance companies, or they have to call to the call center to get the details about their policies. And under the digital takaful or digital insurance, the customers can get their details about the policies through apps, through mobile apps or portals. So this has actually made the obtaining services much easier. A person can, if a person wants to withdraw from his life takaful saving policy, so just like a mutual fund app or a banking app, the policyholder can sorry give request through app. And uh, and similarly for the claim also, there's no need for physical documentation. So this I think has really enriched the customer's experience. I think again, next slide please. Yeah. So now what is the impact of this digital takaful? So uh, when digital takaful is actually growing, and as a result, there's a more communication between the company and the customers. So we are observing that more customer-centric products are emerging actually, because traditionally insurance companies and takaful companies have relied on distribution-centric products actually. When we say it distribution centric, it means that they rely on their agents actually, and the sales is push. But since under the digital model there's a direct communication between the company and the customers, so the company's understanding of the customers needs is improving actually, and which is resulting in more customer centric products. And through the digital takaful, we can address the challenge of financial inclusion and the protection gap as well, because when you have technology, so your access to customer is increased actually. For example, uh, as I mentioned that my company Salam Takaful has a interaction, has a collaboration with the Jazz, for example. So now Jazz has, as I have just seen, more than 25 billion e-wallet account holders around. So when if you integrate your Takaful products app, so it gives access. If it gives you access to 25 billion customers, so financial inclusion and protection gap can be improved by using technology as a built-in of digital Takaful. And our fourth point is that operational costs are reducing. This is a direct result of digital takaful, because uh, previously we have seen that traditional insurance and takaful companies have large back office staff, but when you use digital models, so you can build the underwriting rules in your IT systems, and you can a large chunk of business can be processed very efficiently. So this results in low operational cost, and again, the takaful companies are able to offer customer centric products because of their low costs. And since the basic premises of digital takaful is actually technology, so the more innovation can be done on the takaful side. Next, please. Now, as we are observing that in Pakistan, the digital insurance and the kaful regime has observed, we are observing that regime. And so, what is the way forward for a stronger the kaful sector? So, SECP has given a 5-year strategic roadmap in Pakistan, and that 5-year roadmap targets a 30% market share by the end of, I think, by the end of the strategic roadmap. So SECP is prioritizing the growth of the Takabul sector, and uh, in my opinion, uh, if we want to develop the Takabul sector, I think so we have to really institutionalize the development agenda. By institutionalize the development agenda, I mean that we there's a need for a insurance or Takaful development forum, which should have representation both from the regulator as well as from the industry. And another important thing which is required in Pakistan is a private sector, local reinsurer and re-takaful operator basically. So there's a one re-takaful operator in Pakistan. It's basically reinsurer, Pakistan Reinsurance Company Limited, PRCL. But PRCL, as you know, it's a government-owned reinsurer. So when it is actually, it relies on the monopoly, because a certain percentage of market share has to be given to the PRCL, or at least it has to be offered to PRCL. So a market economy cannot operate on the monopoly actually, you know, because risk management is a very dynamic field. You want that your retakaful partner or reinsurer should be your real risk manager actually, on which you can rely when claims are required. So there's a need for a local retakaful operator in Pakistan. As we are seeing more on the digital takaful side, so I think the the industry needs to put more focus on customer centricity. It has to see it should need to enhance their understanding of the customer's need. And one way I would like to recommend is that there should be policyholders satisfaction survey in Pakistan, because normally the product development as well, I think it is more on perception based, that this is required in the market, but I think it should be more on a factual basis and on a survey basis. Yeah. In Pakistan there's a huge protection gap, and I believe that that protection gap can be well bridged through takaful, and particularly using the social takaful schemes. Currently, they are actually social insurance schemes, but I believe it can be to the social insurance scheme as well. By social insurance, I mean that there, for example, there's a compulsory group life insurance, so that should be converted maybe to a compulsory group takaful scheme. And if we introduce a compulsory health, occupational health, so that should be done through takaful. And similarly, when the government is launching social health schemes, so the government should also prioritize that the social health schemes should be through takaful. And again, as until the generation Z or more younger generations take full charge in the economy, uh, there is a role of distributors, particularly the individual distributors. So there's a need for more uh, professionalism and training and code of ethics to be followed in on the distribution side. Takaful is basically, if we compare from a technical side, it's a P2P risk sharing, peer to peer. So we internationally actually we are observing that there are actually decentralized finance is emerging actually. You know, so similarly on the insurance side, there is a small shift from the a centralized insurer base from a decentralized insurance pool actually, I think. So I think Takaful conceptually can bridge this gap, by bringing innovative solutions for this decentralized insurance pools. I think. Next slide, please. Yeah. Uh, at the end of my slide, I would like to just mention few initiatives being taken by the SECP in Pakistan, uh, which is also helpful for the Takaful sector. SECP has, as I mentioned, is working on a industry-wide Takaful transition plan, and it has asked the conventional insurance companies to prepare a plan and get that plan approved from the board and then submit to the regulator. So I think this will provide an impetus to the growth of the couple sector. And SCCP is also working on the REIT couple side. And SCCP has shown, I think, more flexibility and more openness in changing the regulatory framework to support on the general couple side. And there is a we are seeing a shift from IFRS 4 to IFRS 17, and SCCP is also working on the takaful sector specific implications on the accounting side, which is good to see. And then these are some other initiatives underway in which SCCP is rationalizing the requirements for the sale of saving products through digital online channels. SCCP has issued a directive for the conventional insurance companies and the couple companies that they should put some products on their website so that the digital selling is more enhanced. And then SCCP has actually simplified the product submission requirements. On the life side, the products have to be approved by SCCP, and we have seen some simplification on that side. The illustration is a document which is used to sell the life insurance policies. So SCCP has simplified the illustration format recently. Uh, then SCCP is also working on the motor insurance repository, which is being managed by the CDC. So this will also give, I think, impetus to the digital insurance and takaful, and has issued certain relaxations for the foreign reinsurers requirements. Next slide, please. Now, at the end of my presentation, there are certain few challenges on the takaful side. Uh, the first is that first the generic matter problem, which is of the awareness and prevalent certain misconceptions. So awareness is a in Pakistan, financial literacy is low, and obviously the awareness is also low. So that is challenge not only for the couple side but overall financial sector. So I think there's a need to increase awareness, and still the trust in insurance and takaful is to grow actually yet. So the low trust is also one of the issue, and the market on the marketing side. The insurance sector lagged behind, I would say. So insurance companies and takaful companies need to put more focus on the marketing side. Uh, and one challenge is that on the B2B side, there is still a preference for conventional insurance for business generation, because uh, because the corporate sector, I think, views that the general insurance companies are more financially sound and have more muscles. So this is a one problem for the takaful sector. Then on the general takaful side, there's a limited re-takaful capacity, as I mentioned, and there's a capital requirements SCP has enhanced. So I think that this point seven will be addressed in future, and I think the couple companies are still working on this transition plan. So once we have guidelines from the Sharia scholars on the conversion side, so that will help in this transition. This is also an area that the kafil companies can invest only on in Sharia compliant investments. So the limited market for sukuk and uh, Islamic financial instruments, it is also one of the main factor behind the growth of the kafil sector. Next, please. Yeah. So these were the challenges, but also there are certain good things and with factors which I think will help the kafil sector to grow. As we all know that there's a decision of Federal Sharia Court of the Islamic economy should be done by 2027. So that is providing impetus. SCPPs has vision of converted. So this is a area which is providing growth for the takabul sector, especially to the existing takabul companies. Uh, I think if the couple companies introduce more standardized and simplified products, they can capture this opportunity for the enhanced the couple products. Uh, if SECP, as SECP is pushing certain mandatory insurances, so if these mandatory insurances are provided by the couple companies, so that this can also provide growth. And then the couple curve for public sector assets. For example, federal government has many assets which are generally insured by the National Insurance Company (NICL). So either NICL to be converted to the kaful, or the federal government may also change the requirement from insurance to the kaful. So that can provide growth. And similarly, I think Sindh Insurance Limited, there's a company in the province of Sindh. So similarly, if the government of Sindh makes the requirement in favor of the kaful, so that will provide growth for the kaful sector. Next slide, please. Next slide, please. So these are the actually four plus of SECP's strategic plan for the kaful sector, also to the insurance. One is the transition to the kaful, and but transition to the kaful, as I mentioned, that SECP has asked for a transition plan from the conventional insurance companies from to convert from the insurance to the kaful. And then there's a risk absorption and re-takaful side. So SCCP is also actually enhance the capital requirements and rationalize the re-takaful requirement. So that is also important for the growth of the kaful. And on the governance and disclosure side, there's an adoption of international standards of accounting. IFRS 17 is being adopted in a gradual manner by the kaful sector. And there's a guidance for on surplus distribution. And SCCP is actually focusing also on the enhancing the awareness as well. So next, this is from my side. Thank you. Next slide. Last slide.
So I just have a question regarding the Sharia compliance part in takaful industry. And how do you find that the area of achieving Sharia compliance within the digital takaful? Is there any challenges that comes up within Sharia concerns when you are about InsurTech? So, and if there are any efforts that are made by the Sharia or Fatwa councils in coping those challenges of InsurTech?
Yeah. Thank you. I think it's a very good question. Um I think on the Sharia compliance side, as the digital takaful is evolving, uh, so basically there's a more interaction uh, on the product development function and the Sharia compliance function, I think. So, but in Pakistan, the Sharia scholars are, I think, quite, I would say, forward looking and on the and more supportive to growth while maintaining the ethical side of the financial protection. So there's no, I think there's no challenge on that side, but it is just a matter of time that as the Sharia scholars have more greater understanding of the insurtech and digital takaful. So we will be observing more direct relevant guidelines from the Sharia side.
Assalamualaikum.
जी वालेकुम सलाम.
सर
तो थोड़ा
आप
अपना नाम भी बता दीजिए, तारुफ भी करा दीजिए जी.
इमरान सत्तार,
फ्रॉम.
स्ट्रेट लाइफ तकाफुल.
ओके जी. जी.
सर आपने अभी अर्ज किया कि जनरेशन जी जब टेक ओवर कर लेगी तो सारा सिस्टम डिजिटलाइज हो जाएगा. आपसे सवाल ये है कि जो तरक्की याफ्ता ममालिक के अंदर जो सारा सिस्टम डिजिटलाइज है तो क्या वहाँ सेल्स एजेंट अब
जी.
या उनकी ज़रूरत अब भी मौजूद है?
जी देखिए इसको मतलब आप इस तरीके से देखें ना कि आई थिंक वी शुड आंसर इट इन मे बी इन इंग्लिश में भी. Basically insurance sales is basically mainly driven by the consumer's behavior actually na. For example, if the people are used to buy the products and services by using intermediaries, then there's a need for intermediaries. But for example, if you see on the Kareem side, for example, okay, if we previously, if you have to uh, gauge a taxi, for example, then you come out of your hotel or your house, and then you look for the taxi drivers. But when you have an app, so that app connects the service provider and the consumer, provided the consumer are used to do that. There are still people who don't use Kareem and they ask their children, please hire a Kareem or Yango or InDrive, no? So but when these people who are actually used to buy products through apps, so then there will be a very, I think, limited role of agents. So it is my anticipation that may be wrong, that gradually we will see a decrease in uh, of the actual physical agents. They are currently we are observing the AI based agents, and insurance companies in few countries are have employed the AI based agents. So it's a challenge for existing distribution in the long run. And I think I'm also here, and I'm also young. I think you're also young. We will see after 15 years where you are. So if there's no question, then it's done from me. Yeah, please.
Thank you. It was impressive. And my question, there are two
Can you
questions.
can you introduce yourself
Yes,
with the
yes.
organization?
I'm Gulam Shabir Babar. I'm an attorney and I'm working in immigration and in Pakistan and US and Canada, Europe as well.
Great.
And it is interesting. And my first question is, what do you think that after judgment of the Federal Shariah Court and the takat full and whether what are the challenges in
In conversion.
yeah, in conversion, whether you're complying, there are something which is to divert, and there's a bank policy and different. And second, my question is, you were talking about the AI. I was in US last year, and there in the Rand Institute, there was an issue related to the tort liability governance and role of AI. If you are saying the AI is working, and there is a the damage occur, which jurisdiction can the customer can challenge? How to on the AI based it's an agent, and you are removing all the physical agents, and nowadays the scam and fraud are people are, and because they are using cards, and and the claims are the money has been obtained from different countries, the people they are scamming, and we have the number of the agencies, if I and they are not detecting the way the amount who has taken it, can you explain the what do you think that the whether there's a coherence policies, or international there is also convention or protocol, what do you think that, yeah.
I think AI is the phenomena of is a recent phenomenon, no? But we have observed I think different phenomena throughout the evolution of humanity. For example, earlier there were kings, and then we have seen democracy. So when there were kings, it was not conceivable that how can people collectively govern. But we have seen from the centralization towards decentralization. I think you know so democracies are working throughout the world, although there are challenges. So whenever there's a new phenomena comes, so it comes with the challenges and opportunities as well. So AI, and okay, when computers were coming, actually, so people were saying, when if after 2000, Y2K, there was a issue, but it went well, and I think we managed that. So I think so it is always difficult to adopt change, and only those who adopt change, they succeed. So I would like to give us share in Urdu. आईने नौ से डरना, तर्जे कोहन पे अड़ना, मुश्किल यही घड़ी है कौमों की जिंदगी में.
Thank you very much, Mr. Sayed, for this great and insightful presentation. And it is really opening the future regarding the insurtech and the digitalization of the insurance and takaful industry that we wish, inshallah, many companies will follow. As mashallah, Salam Takaful is leading the Pakistani market in this, as it is the first digital application. So we hope so, inshallah, to see very soon that more of companies and initiatives are following the same steps and bringing more potential to the market. Now we have a special presentation, another special presentation for today. And our guest is coming from Hijra Bank from Indonesia to present to us the development revolution of Islamic economy and institutions through technology and innovation. Ladies and gentlemen, please join me in welcoming to the stage Mr. Muhammad Nizar Mustaqim, the General Director. The remote to this side. Sure. Thank you.
Yeah, sure, sure.
Bismillah, alhamdulillahi rabbil alamin, wassalatu wassalamu ala asrafil anbiya wal mursalin wa ala alihi washabihi ajma'in. Your Excellency, Mr. Yusuf Kalawi, management team, ladies and gentlemen, Assalamualaikum warahmatullahi wabarakatuh. Thanks for having me here. It's my pleasure coming to Pakistan, especially to Karachi. And this is maybe the first time coming to Karachi, and I would like to sharing about the how the Indonesian fintech development. I hope so it can be inspiring you, especially from the several countries coming to this conference, Pakistan, Malaysia, UAE, and maybe another country, that we would like to sharing a picture about the, how the fintech revolution is working in Indonesia. So, okay. The section will be starting with the history. How's the fintech in Indonesia can be works, and how's about the staging of the fintech in Indonesia. I think maybe in several time it will be working same with the Pakistan, Malaysia, but we're trying to maybe learning from Indonesia solution and can be benchmarking with the other country. So perhaps it can be learning and we can be build the fintech together. Okay. Yeah, this is one of in the slide. That's a picture, a big picture about the how the fintechs are revolutioning in Indonesia. The first, the pioneering stage in 2006 to 2014, that we know in Indonesia the online payment, the online transaction is very growth, and the fintech revolution is starting with the payment gateway. So we're finding several players, and that as like the providing the payment gateway. Maybe in Pakistan, the payment gateway is maybe the first fintech also is coming. The fintech payment gateway is providing the how the user or the online user, online seller, on online buyers is can be connected in transaction. They creating the technology that transforming the payment is more seamless, so bank to bank and integrate. And secondly, in the growth stage, in 2015 to 2018, is far of the how the fintech lending in Indonesia is growing, and it's reflected with the POZK. It's a Financial Service Authority regulation that releases is POZK number 77 in 2016. That's how the fintech peer-to-peer lendings come. I would like to telling a story about the how the fintech peer-to-peer lendings growing in Indonesia, especially for our company. We built the fintech. It's starting to 2018, and currently our portfolio is more than 10 trillion rupiah. So it's how the market's very big and how we're creating the fintech peer-to-peer lending and can be managed and can be fully contributing to the economics. And the next is consolidation. It's 2019 to 2021. We know that in 2020 we're facing some issues in the COVID-19, but the good things is about the how digital transaction is increasing very incrementally huge. So in Indonesia is reflected by the how the QR information is how the QRIS transaction it's growing. I think in Pakistan we're knowing about the RAS system, yeah, system payment. So in Indonesia in 2019 to 2021, we know that the Bank Indonesia releasing the QRIS system, and it really changes how the transaction in Indonesia is currently. Maybe the craze transaction is more significant. I would like to sharing the data maybe in the next slide. And currently, the maturation stage, starting from 2022 and still to present, is how the every startup, every fintech company in Indonesia is starting to building the super apps. They're trying to combining the all provider services in the one application. So the every transaction can be doing in the one apps. So this is part of the how maybe we can trying to elaborate for the next and the moving forward. I think that's related with the takaful that's mentioned. That's a digital takaful also. It's one of the things that can be increments, growing incrementally in the next stage. Okay. Okay, we're starting. I would like to starting with the same study case as our company. We're starting the fintech peer-to-peer lending. The name is Alami Shari'ah. Before our sharing about the how digital banking is works. So I think this condition is same with the several company. The first is why the fintech peer-to-peer lending is growing because of the gap of the financial penetration. Some of MSMEs is a have problem to getting the financing, or we call it the lack of the financial access. So we're finding it same in Indonesia also. That we know if the MSM is trying to getting financing to the banking, they getting many problem. The first problem is a collateral, the rigid collateral. Needs a secure loan. It needs to be 100% collateral, fixed asset, etc. I think that's a huge problem for the MSMEs. Secondly, the slow process. We know that banking, especially who financing for SMEs or maybe commercial or corporate, maybe need time around 1 month or 1.5 months to process from the document collection to be approved and to be disbursed. And the last is about the cost, the high cost, because of if not using technology, there are so many manpower costs. It's very huge because of there are so many processes. It's processed by the man by man in every process, and the result is and another thing is there are so many lack of credit history of the MSMEs, and we know that is the really a pain point that we need to be solved. So because of we knowing that in Indonesia the market is very huge, MSMEs has a represent the 99% economic, and but the pain point and financing gap is 60 to 70 billion USD. It's unmet demand, means lack of the financial access. And you know that after we knowing about the pain point, we creating the fintech peer-to-peer lending company. I think Pakistan with the more than 250 million people, it can be the same with Indonesia. There are so many potential the micro, small, medium enterprise that can be penetrate of financing using the fintech. So this is what we creating. Yeah, this is our platform. It's the name is Alami Sharia. Every process to find an MSMEs is on the application. The first is when the MSMEs or the entrepreneurs coming, just using the website services, they proposing the financing and will be directing going up to our team. And the process all is really by technology. The first is document collection. After the document collection, we do the credit historical checking using the technology, and after that, we do the credit history, the credit scoring, to providing the parameter and providing the recommendation for the committee financing to decide. And after that, after the all deciding, the next process is all akad, Sharia compliant akad or Sharia compliant agreements is implemented in the generating document, and we sign with the digital sign. So the end-to-end business process is can be processed automatically and by application. So after we do that, we can speeding or expediting service level agreement for financing process from 1 month for one application to be just 3 or 5 days. So this is one of how fintech or how technology can expedite the process. I think it's really good learning from this situation because we know that Pakistan have a good talent and technology, have a good talent in banking, will be combining to creating many aspects like that. And I know that Pakistan bank, the bank in Pakistan have a mandate to Sharia compliant bank. I think it's momentum. Just trying to how the banking workings is like embedded the fintech system, fintech model to be the process. So it will be more efficient to the process and more people actually attractive because of they want to pay a pricing or they want to pay margin more higher because they feeling satisfied that the process is more seamless than before. And currently, from our platform, we built it 2018, and till current, we accumulate financing is about the 7.3 trillion rupiah, and there are so many recipients. around 2,000 MSMEs has been financed. Especially, it's not only in the small and medium, but also in the micro, especially the agri sector. It's like fisheries, etc. And this is how the fintech's very interesting because of if we know that in Pakistan, I know that the agri sector is very growth is growing very huge. So this is part of how fintech can be connected with like a cooperation in every agri sector. We build a system and matchmaking the system. It can be more process efficiencies. Like if there are if there are farmers, if there are maybe businesspreneurs in the agri sector need the financing, they just click in one and submit the application. They pulling the document, and after that, in one day, they getting the approval for their financing. So I think it will be good and will be efficient. So this is the process, and what kind of thing that we need to growing that peer-to-peer lending platform. The first is advancing credit scoring. Now, this is I would like to telling about the technical of credit scoring. Actually, the credit scoring is how to conversing what the human do to the system. But we need to creating the grid parameter. The first thing that if you want to trying to analyze the financing, the 5 6 principle is I think is a common, and how we can converting the 5 6 principle to be the system. It's like the how the capacity, capital, character, condition, and the collateral, and connect it to the all parameter. And in the parameter, I think the engineers on your team, on your bank, it can be built about that. So how the parameter can be creating the scoring with the same parameter can be help the bank to recommend or to decide this is eligible or not to be a finance. And secondly, digital ecosystem integration. If we are talking about the moving forward, digital ecosystem is very important because if we want trying to creating a grid system without the ecosystem, it cannot be fully optimized. So I think in every country, every person in every country have facing the same. Alami is creating, trying to connect it with the business ecosystem. So this is part of why we can growing very huge currently. And community-based financing, synergy with Islamic Bank. So the fintech peer-to-peer lending and the banking at the first stage is like competitive. It's like as compete one and each other. But after we learned, it's more than 5 years that the fintech peer-to-peer lending and the banking is actually need to be synergized. It's like can doing the channeling program. It's like when the banking need to growing their business, they can be using the fintech system or the fintech company to process it. So they can be expediting the service level agreement. And the banking is just providing the money and trying to creating the risk acceptance criteria to build the good risk appetite. So it would be expedite the process, the banking growth and the fintech will be growth. And I think it can be creating, especially for the Pakistan, I think if the bank and fintech can be connected with the channeling models like that, so there are so many young people or maybe young startup people can be creating fintech to solving the issues on the financial access and can be growing the bank grow together. And the last is B2B supply chain fortification. Yeah. So I would like to sharing about the macro condition of Indonesia, and we'll be starting to telling about the how we build digital bank. So I just want to I remember I forget to introduce that I coming from Hijrah Group that currently running 2 business. The first is peer-to-peer lending platform. We're starting with Alami Shari'ah, and in 2021 we're trying to build digital bank. The Sharia Digital Bank currently is the name with Hijrah Bank. So I would like to telling about the history why we creating the digital bank, and I think that's related with the Pakistan that maybe for the 2028 mandate that need to be Sharia to be Sharia compliance bank. So this is the data. I think that's interesting data related to the yeah. Indonesia is third highest GDP growth among G20 partners, G20 peer. And Indonesia, I think the same with Pakistan, have the largest Muslim population in the world. With our population is around 218, and Pakistan 250 is not really different. Indonesia has a largest Muslim, which is really potential for the Sharia compliance digital bank. And Indonesia have a demographic bonus until 2043, much later than peers. And what as mentioned before, that currently the huge generation is Generation Z. They using the transaction, all transactions using mobile. So this is huge potential. And why we creating digital bank after we're creating the peer-to-peer peer-to-peer lending? Because we're trying to moving forward. FinTech is solving the issues about the financing access from the MSMEs. And now we're trying to creating how we can providing the Gen Z, the millennial or the previous generation to be more easy to transact in Sharia compliance banking. And they need to easy to be seamless transaction, etc. So that's why we're creating the digital bank. And Indonesia Rabbit's smartphone penetration driven the youth. You can see that from the 2010 to 2022, there are very significant growth in the how the Rabbit smartphone penetration by the youth. In Indonesia, one people can have two or three smartphone, and they using that is very properly. So this is one of how the rapid smartphone in the youth can be growing significantly. And the next is robust banking sector with control inflation. In Indonesia, inflation rate is small. It's around less than 3%. Especially can you can see in the pictures. And exponentially QR payment adoption after Bank Indonesia released increased integration system to payment transaction, we know that decreased integration can be converting transaction to be more cashless, especially in 2024 and moving forward. So this is part of data. That's how we creating the digital bank. I think if the Pakistan, Malaysia have the same demographic, have the same data is like that, we can doing the same things that we're trying to build the digital bank. But we need to remember that the first thing we need to growing if we want to grow our digital bank is build ecosystem starting from now. So this is why we are playing on the Islamic banking. Beside, we know that Islamic banking is not about the how we can Sharia compliance, but about the ethical. About the ethical is very important, and the market, as per mentioned before, that Indonesia, with a largest Muslim population, is one of the country that have a huge potential. Islamic banking is a hidden gem in Indonesia banking sector. We know maybe currently the in the market shares at the starting maybe 2015, it's still 4.5%. But maybe less than 10 years, it can be growing to be the market share to be 7.4%. And the penetration, perhaps in 2040, can be reach the market share as 22%. So this is how the growing of Indonesia Islamic banking. We can comparing a graphic line, the blue and the gray, that Islamic finance is growing more significantly than conventional banking, which conventional bank in Indonesia is starting more earlier than Islamic banking. But Islamic banking growth is huge. It's very incremental growing. So this is part of the why we're trying to creating and to optimizing the digital bank because the market share, because the market potential is very huge, especially moving forward. Okay, so I would like to telling specifically about the Gen Z. This is related to the customer behavior, I think Pakistan, Malaysia, United Arab Arab is facing the same condition. That it just maybe in the less than 5 years, because of the rapid transformation, rapid transaction by the Gen Z, we knowing that the lifestyle, transaction, etc., and economics is currently still will be dominant by the Gen Z. So that's how we're creating the digital Islamic bank. Because of our market's very big. Gen Z is the priority market. Gen Z is the priority market, and especially after COVID, the all transaction is going online. We believe and we confident that the next era of the fintech is will be dominant by the digital Islamic banking. So perhaps it can be inspiring, ladies and gentlemen in this room, especially who have a mandate to be converted to be Shari'ah banking in 2028. So Islamic banking is very huge, but the thing that you must be know about how we increasing our company is knowing the characteristic of the target market. Why we creating Islamic banking? Because the Gen Z, millennial, and Indonesian people is trying to getting digital banking apps as a lifestyle. How they using transaction all on in apps. So I think it will be the same or maybe slightly different with Indonesia, but lifestyle in transaction is will be the driven of the Gen Z to be transact. So if we don't start trying to convert to be digital banking, it will be late maybe on the competition landscape moving forward. So after that, after the whole things of the history, we're trying to build Hijra Bank. That's currently I manage it. So this is part of the Hijra Bank condition. We knowing that's our so many people thinks that if we are trying to using technology, how about the compliance thing? Yeah, this is fair. This is maybe a challenge in every country. To building the regulation is very hard, especially for digital banking. And what we can do, especially the synergy about the banking sector, banking association, and the regulator is very important. This is I would like to telling about the how regulatory works in Indonesia. Indonesia is can be creating a proper regulatory because of the trigger by the banking sector practitioner. So we as a practitioner in the banking sector is trying to build, trying to pilot, and we get learning, and after that we're trying to propose the system, propose the regulatory that can be matched with the current target market. I think it's very potential. It's like beside we trying to doing top bottom regulation, but the bottom up regulation we're trying to assure what can do in the market, what happen in the market is very effective to creating and trigger a regulator to be proper regulation. And this is one of a picture related to the we working. And currently, we are Sharia compliance regional by Financial Service Authority, Sharia compliance marketplace lending or platform peer-to-peer lending, and we're providing the mobile banking. And we also have a license on the CRIS and FIMAN license. And the list of activity we can do, every user can using online saving, online deposit. They open account, KYC, EML, risk analysis using everything is using online and using application, and we providing the financing for the productive, for the consumer financing or retail financing, QR and bill payment, providing physical and virtual card, SME banking feature, and Sharia restricted investment account. Yeah, it's just a picture about our company. And sorry, this is part of our mock-up related to the what the Hijra Bank create. And this is very interesting. You can see that in apps, QR is showing for user and QR. The picture is a Sonbok Kris. This is the first Sonbok Shari'ah Kris in Indonesia. When people transaction, the Sonbok is will be creating the sound. It's like Alhamdulillah, transaction is processed. Jazakallah khair. It's very simple things in technology. It's very simple, but we need to creating the uniqueness in the competitive landscapes like that. And we know that the future of the financing working, especially for the MSMEs, is how we can generating or we can creating the credit scoring is based on the credit transaction history by the MSMEs. And Chris is pulling the whole data, and Chris can be managed and tracking the whole data of the MSMEs, and we can do setting the credit history, credit parameter, and can track decision is trying to expedite the service level agreement. Maybe from 1 day can be 1 hours, etc. So the last is our innovation is trying to gather data from the MSM's transaction, but we're trying to keep the system, the product is attractiveness, especially for the Gen Z entrepreneurs, etc. So it's one of what kind of the system Hijrah Crescent Box. And I would like to telling about the lifestyle of the Gen Z. Yeah, why I also told you about the Gen Z, about the millennial, because I'm currently a millennial also. My age is 35 years old currently. So I really knowing about the market and the next future of the market. Why I doing? I also talking about the lifestyle. That's why we creating the first Hijrah book for a customized saving and save now by pay later. We knowing that the Gen Z is more wise to manage wealth in Indonesia. I don't know in Malaysia, in Pakistan, it's the same condition or not. But because we know that Gen Z aware on the investment, on the wealth management and everything, we're trying to creating the box in the application for what? So the Gen Z or the user can be managed their money to be more proper. They fund to be more proper. And we can give a recommendation, and this is part of how AI system can we embed to the system. So this is for example, when user using our application, they can be managed they fund in several box for Idul Adha, for Idul Fitri, for Kurban, for school, for everything. Yeah. And the system will be get and AI will give recommendation. Maybe, yeah, maybe the user who really good in manage the money can be recommend to paying zakat, infak, sodako. So the economics will be growing more properly, and how the ethical Islamic ethical bank can be more working and can be coming to be realized to be more growing. So this is one of how we can creating about the Hijrah Digital Bank. So this is about the history, and currently we're talking about the moving forward. We're talking about the macro condition globally, about the several things in several countries, and my recommendation for ladies and gentlemen who are coming here to be sharing in this session. So let's check about how the moving forward about the digital bank and the industry. Okay. First, I was telling about the Sharia market also. That's this is part of the momentum for the Indonesia because of there are Indonesia currently has 2,000 trillion in Sharia financial asset, and we know that more than 2 million is getting the halal certified product. It's based on the roadmap that's creating by the Indonesian government, and strong consumer for demand for the halal transaction is more than 64%. It's driving by Gen Z. Yeah. And the path forward challenge and the national goal for 2029. Yeah, we have 4 years moving forward. It's about the talent gap in Sharia, and national goals for the 2029 is how we increasing Sharia economic GDP is to be 56%, and target expand the halal product. I think it will maybe the same with your country, but maybe can be slightly different. But the thing that we can summarize about is the transaction is can be more incrementally grow. It's driven by the Gen Z, especially in 2030. So we need to preparing to creating the system that's very attractive, that's very customized for the Gen Z market. Because of the Gen Z, it will be the driver for the GDP. So this is one thing that we can summarize on the economics outlook. And we know that we as an Islamic country, especially for largest Muslim population in this country, Indonesia, Malaysia, Pakistan, UAE, is have the potential to creating the Sharia compliance digital bank because of, I think, currently they really aware about the transaction, etc. And Gen Z is knowing about the ethical. So the next, our homework is not about to providing educate about the Sharia compliance, but how the ethical transaction, ethical banking works. I think it would be interesting for Gen Z because of in Indonesia, zakat, infak, sodakoh, cash wakaf, link deposit, it's highly grown because of Gen Z is really aware about that. They really knowing about that. So perhaps it can be good pictures for remind us to knowing about the target market and to be optimize our market. Okay, sorry. Okay, so this is the focus on the growth sector, and I think it will be the same with if I learning from the first day in this conference, and I discuss with all of you, ladies and gentlemen, in the round table. This is especially session before me. It's about the takaful. Focus on key growth sector in Indonesia is will be as per mentioned in the slide. The first is wealth tech and insurtech. The takaful is will be growing because of Gen Z also. It is because of driving by the market also. Currently, maybe market is not really aware about the takapul, but for next, when they really knowing about the how the wealth management system, how they really aware about the how to manage fund to be aligned with the Makosid Sharia, I think the Gen Z will be aware and trying to using the wealth tech how to manage. That's why we're using Hijrah Box to providing for services for the Gen Z to be manage their wealth and the insurtech because they're really aware about the how to manage money and fund to the for the future. And we are as a Sharia fintech ranking third globally. We're trying to Sharia compliant crowdfunding platform. Yeah, this is our focus on key growth sector and green fintech. Yeah, I think uniqueness of the green fintech can be implemented in every country because of our markets currently is philanthropies, is knowing about the ethical and etc. So I think it's one of the things that interesting and embed finance and all finance can be embedded. This is why we need to focus AI power fintech. So, ladies and gentlemen, I think AI is currently is really dominant, especially in Indonesia. We do anything by AI. I creating presentation for the picture by AI. I decide decision for the committee meeting, etc. Several by AI. But the important thing is how we can using AI properly and can be using really can be optimizing the decision. So I think maybe you need to knowing. I see that several banking in Pakistan is using AI for the customer services, is using AI for several services. I think we need to embed it more AI function. It's like for the credit scoring. AI for the credit scoring, I have tried this with my team in engineers team. That's if we implement AI for the credit scoring, maybe we can take a decision for the commercial and corporate financing is less than 1 hours. But remembers, the human factors, characteristic of the debtor is need to be validated. But if we are trying to system the future system, how we creating the banking sector to be grow more faster than before, I think AI is one thing that we need to implement in the system, and the AI is not really it's not really developed by in-house or by internal or maybe by the engineers in our company. We can also synergize with the technology from the whole country. I would like to share about that in the next slide. And the open banking API. Open banking API is very interesting because with the open banking API, we securely connecting various app with banking system for sale. This is the future of the banking. We need to creating the infrastructure for the open banking because of we can connect it with the more several vendors, several company. It's like digital bank can connect it with Takaful. Digital bank can connect it with payment gateway. Digital bank can connect with fintech, etc. So once user using digital bank, our digital bank apps, they can choose anything. They can invest to stock, Sharia stock. They can invest to sukuk. They can invest to everything. So they really feeling attractive and engaged with the application. So this is one of the things that can be summarized that we need to creating the digital banking. I hope it's again it can be inspire you, especially in Pakistan. That would be Sharia compliance banking in 2028 and fully digital. It can be the one we can start from here. So this is in the next slide. This is an example and several innovation in a very different market. It's like in Maybank Islamic Bank is launching the blockchain powered platform for sukuk issuance in March 2024 in Malaysia. In January, Dubai Islamic Bank partnered with the European Sustainable Investment Fund to develop Sharia compliance green infrastructure. Yes, this is how I trying to grab what I mentioned before. In June 2023, Al Raji Bank expanded its digital banking suite with AI-driven Sharia advisory tools, and Hijrah Banks currently works with that. So when user is trying to knowing about something in the wealth management, etc., they just can chat the AI and an AI can answers. And in February 2024, Kuwait Finance House formalized a strategic alliance leading Islamic fintech startup to integrate peer-to-peer financing. What I said before, that connecting, channeling with the peer-to-peer is one thing. So the banking and peer-to-peer lending can be connected. As per mentioned in previous presentation, that sukuk and peer-to-peer can be connecting also. Takaful and peer-to-peer can be connecting also. In May 2023, CIMB Islamic established a dedicated sustainable office to oversee the development and certificate of ESG-aligned Islamic financial products. So it is just one of several examples for what I said before. So I learned very interesting keyword from the first session yesterday. The first is keynotes from Mr. Jamil Ahmad, SBP governors. Key important point in digital finance development is first, digital infrastructure. So digital infrastructure, you need to aware about to how to build digital infrastructure. I think the government is creating digital infrastructure, especially for the technology, telecommunication, etc. But you, as the banking practitioner, need to develop the system. Is develop to build house that's enough to creating the technology that can be absorb the market demand. So it can be challenging if we are trying to building home that's not enough for the system, the technology. So I would like to remind you that if you want to trying to creating the great digital bank, trying starting from the digital infrastructure, and I really agree with the Mr. Jamil Ahmed statement. And second is payment ecosystem. As mentioned before, starting from the payment ecosystem because everything's demand is coming from the huge transaction potential and the licensing digital bank. And uh, I get a learning from the Mr. M. Nasir Salim that's the key point for the next era is focus on ethical finance. Back to the Makosid Sharia, synergy is important. Synergy is important. To build the digital bank, we cannot working alone. we need to synergize with the other fintech, connected with the peer-to-peer lending, connected with Takaful, connected with Sukuk, everything. So we cannot working alone. Digitalization help everything move faster. As per mentioned before, with the technology, we can do credit decision, financing decision from 1 month to be maybe just 5 days, and next maybe just 1 minute. We never know. And paperless process to boost customer experience. I agree with that because Alami Sharia had an experience on that. That everything is end to end by automatically, and it can be help the people's using feeling satisfied, good user experience, and it can be growing our business. And the next is Haim Zafar Masood said that the goals of technology implementation is to support company to reach many customer, especially the customer as our target market. So creating the uniqueness to be reach more customer. And the last is from Mr. Muhammad Anwar from the Pakistan Angels. Generative AI era is changes everything. The era support and help company to be faster, create a good customer experience. Everything can be embedded by AI, and AI will be the driven to the company. So maybe this is one of the hijrah need to recommend for all of you is how we works to creating the digital platform, to creating the digital apps. This is for sorry. Wait. Okay. So the first thing, our 5 core objective. I think it can be benchmark. It can be learned from this. Create innovation based on Sharia value. Do not forgetting or avoid Sharia value. We knowing that we need to build Sharia digital bank. So based on Sharia value. Two, enhance the bank operational efficiency and quality. Accelerate time to market for digital solution. So the first thing, when you're trying to creating digital bank, remembers that's what's the market want, what's kind of the demand that we need to solve. Maybe in our digital bank, we cannot provide what other digital bank do, but we're trying to creating the box to wealth management because we knows that this is market wants. So this is we need to remember about that. And build sustainable AI and data capabilities. I think Pakistan, Malaysia have a good talent in technology, in data analytics and everything. So it needs to be optimizing because of if we want trying to creating a huge digital bank, the first thing is accelerate time to market for build sustainable AI and data capabilities is really important because of we can take decision what kind of a product, what kind of feature we need to develop, what kind of the next strategy for years, for 3 years, 5 years is based on the data, especially data transaction from the user, etc. And the last is serve a Hijra central hub for internal and external collaboration. I think collaboration is one thing that we need to still remind because we can working alone. And 5 strategic roles is the first is innovation engine. So I think the banking, if I know that's maybe comparing to Hijra is not really mature because of we just starting the bank is from 2021, 2021. So it's just 5 years. But I know that your bank, your company is more than 20% established. So this is the key. You have a huge capital, you have a huge experience. I think you can be much better than Hijra. So the first thing is innovation engine, generates idea, prototype, and scale ready product. I think you need to creating digital division, which inside is fulfilled by the youngest talent that have a mindset. It's like a startup mindset. So the I think the management in a bank or high level management can creating the innovation is like sandbox team in the internal etc. or division in digital or digital transformation division. I think it's very important because of beside you doing the common business, stabilize the common business, you need to creating the creativity in the site. Yeah, it's really important because there are so many development is going slowly because there are no team who is respectively responsible to the growth. And second is collaboration hub, uniting internal unit partners and vendors and how we integrate. And value enhancer enhances focusing on the revenue generation, cost saving, and risk reduction. And knowledge centers manage our collective intelligence and insights. And governance sandbox ensure our innovation remain compliant, Sharia aligned. So this is what I said before, we can creating the division a specific that have a growth mindset, we can do piloting, and we need to collaborate with the governance. Every pilot, everything that we trying to create for the growing of our company needs to be communicated to the government, so the government can getting insight and can creating the proper regulation to help us to growing the business. So this is part of the framework. So next slide. I think that's several slides. So perhaps we can discuss further. AI exploration and development is this current focus works that it's Hijra reflected. I think that's so many company here with the same condition. The first, we're trying to creating the AI based wealth management. Second, we're creating the AI for financing origination system. The third is AI implementation for customer experience. Why we focus on this? Because after we're trying to do research about the Indonesian market, the three aspect of how we embedded AI is very important. I think Malaysia, Pakistan is they have the same market, and I think if you do trying to research and doing development on the same things, it will be great for you to implement the AI on your digital services. And the current, another current focus is build massive community and the ecosystem. This is the formulation, actually the success formulation. I would like to telling about the Indonesian market. Beside Hijrah Bank, there are so many digital bank. Currently, our platform has around 100,000 users for the digital. It's just 1 years actually, yeah, 100,000. But beside us, there are so many conventional, not Sharia compliance bank in the digital. It's getting from the maybe 100,000 user being a million user. That's why, because they can connect it with the ecosystem. It's like the first super bank. In Indonesia, we have a digital bank naming it super bank. Super bank can be growing their user to 5 million user in maybe a years because of they connected with the Grab ecosystem, the drivers, the Grab user, everything. So this is part of the benchmarking and part of the learning that we can get. And beside that, we have in Indonesia we have Bank Jago. The name is Bank Jago. Jago. They can reach more than 5 million user because they can connect it with GoTo ecosystem, Gojek and Tokopedia ecosystem. So if we can creating the great ecosystem, we can creating the great growing on our business. And what about Hijrah? What is kind of the focus of the Hijrah? We're trying to focus the MSMEs ecosystem. Yeah. And the last is Islamic finance potential peak due to demographic culture, as per mentioned in the previous slide. Okay, this is the pictures that I trying to do benchmark and trying to checking the difference, and I think that's really interesting. Actually, I get this journal and I trying to generate by AI, and I get the good summarize. The first thing is this is the difference characteristic between four countries. The first is Indonesia. Indonesia need to focus in technology and ecosystem. Yeah, Indonesia key strength is distribute data hub, MSME, social commerce, and the financial focus is Indonesia is need to be highly trying to be more regulate, it's like digital banking regulation, etc. and Indonesia needs to optimizing the market, Gen Z, that's wealth management. So need to creating this several product and services that's really unique and can be customized with the Gen Z. It's like the zakat, infak, sodako, Sharia restricted investment account, and cash wakaf link deposit. Because of the next there are the ethical Islamic finance works. And Pakistan, I see the technology and ecosystem focus. Pakistan with the more than 250 million peoples with a good talent in engineers is need to be optimizing human capital to be learned from several country and back to Pakistan. I think there to creating the great startup that can be creating the ecosystem, because the Pakistan the strength is about the talent, especially in the technology. And we can see that financial innovation that I think with the mandate to Sharia compliance digital bank in 2028, it is part of the how the Pakistan can revolutionizing economy with the Sharia, especially in digital bank and asset tokenization. Okay. And the Malaysia, you can see maybe I don't telling all of them, but this is part of the every country have differentiation, have different unique market. So if you want to trying to creating a platform, please trying to customize, ensuring and align with what kind of the thing that's really growing in your country, especially for Malaysia. Maybe currently Malaysia is trying to increasing the real estate investment trust, sukuk, etc. And on Pakistan, I think rates also, etc. So this is one of the things that we need to be ensure. Currently in Indonesia, we still focus on the retail banking and the MSMEs banking, because of the Indonesia currently the economics growing by the MSMEs. So we're trying to getting the whole ecosystem and trying to growing the business by the ecosystem. So this is maybe the last slide from me. Yeah, after that is the last about the framework. The framework is setting related to what we can do, and this actually the framework is adapting by the balance scorecard. The first is on the people and learn growth aspect. That we need to optimizing local talent with a global fintech mindset. Second is higher price for higher quality and engagement. So if you want to trying to creating a digital bank, trying a good technology, hires your the best talent. It's what the Hijra Bank do. When we starting the to build the Hijra Bank, maybe our our team is around 500 team. We are startup and we get 500 people on our team, and 50 or 60% is the best IT talent in Indonesia. So we're trying. So we need to invest on that if we want to trying and growing and speed up the process. And after that, we can we can trying to build the efficiency, etc. And from huge engineer era to proper composition. So in the last 5 years, that fintechs is optimizing a huge human that's really experience competences in the engineers. But currently, we know that to efficiency the cost is we can creating the ecosystems like we can hire the best talent on engineers that can be managed the all of thing, the mindset, everything, and growing progress and plan. And AI can be boosting to ensuring the process of development can be more speed up. It's implemented by Hijra. Currently, from the numbers of engineers number, maybe around 60 to 100 engineers person, we trying to efficiency the numbers of people, and we're trying to embed several AI tools to supporting, because one AI tool can be the same with maybe three or four or five person. It can be coding anything, build something, anything. So this is one of the interesting in the people learn and growth. And in the second is about the business process and compliance. Increasing process development and assurance model is like what I said before, trying to creating, develop, piloting, and connect it, communicate with the regulation using the association, or you trying to do the FGD with the regulator. So it can be creating the growth mindset for the regulator also. So the regulator can be expediting to how to creating the proper regulation. And second is actively expedite the regulation with the role of fintech association, synergizing among all stakeholders. How the amongst all stakeholders, IT providers, every stakeholders in every sectors connect with bank, takaful, stock, sukuk, anything, and ensuring all regulation and implementation of cybersecurity in front. Yeah, we still to knowing that the challenge of the digital is about the cybersecurity. GDPRs in the Europe, in Malaysia also is currently focused on the cybersecurity, and in Indonesia. In the last 2 years, that Bank Indonesia Financial Service Authority is really concerned about the how to develop the general data protector system, how to ensuring the all cybersecurity is managed properly, and market and branding. It is very interesting. Focus to deliver product and services relevant with the market and needs counter economic uniqueness, as I mentioned before. What kind of the unique market in Pakistan you're trying to setting up that's relevance? Malaysia setting up with the relevance, and the other country also. And amplify with technology to build strong customer engagement. The last is gamification, which align with target market. Indonesia gamification is about wealth management. I don't know what's kind of the uniqueness of target market in Pakistan using gamification. So the people's also engaging. It's like if we are if the Gen Z millennial or maybe a user open the phone on smartphone, it's not only open the WhatsApp, but also they really curious to open the application. It's like Hijra is trying to setting the box because of to manage funders, and beside that, it's like Islamic features like Qiblat, anything, or maybe they can learning about the Islamic finance on the application and AI application. They just to knowing if I getting 1 million rupiah, what I need to do. Yeah, they can speak. I give recommendation. It's like I think that how we can creating the uniqueness in our application. And the last but not least is about the financial. Ensure to focus on unit economics to ensure sustainability. For example, currently maybe the pricing of the financing in several bank is maybe around 9 to 10 or 9 to 12 percent per annum for the financing in Indonesia. If we can creating the uniqueness, the process is from the 1 month to be 1 weeks. All people is can be pay more higher because they're feeling satisfied, because they getting good user experience, seamless, they getting money so easy, seamless, but still proper. They can pay 20% per annum instead of just 10% per annum. So it can be creating the good unit economics for a company also. So it's one thing that's I think everything's done from me. uh, Maybe this is just a little bit that I can share. Then I know that our banking, our company is still in the startup stage. It's less than 10 years actually. But Alhamdulillah, currently we contribute on the economics. We're financing more than 11 trillions for now from currently since we starting. Yeah, perhaps it can be inspire you. It can be sharing. Really love to sharing with you, and hope it can be inspire you. And perhaps I hope Pakistan can be a country with the highest digital bank with the talent potential. Malaysia also, and every country also. Ladies and gentlemen here with the company. Thanks for me. Assalamualaikum warahmatullahi wabarakatuh. Yes. Sure.
Thank you very much, Mr. Muhammad Nizar, for this great, fantastic, inspiring, and detailed presentation. It really opens horizons and it shows great example that Islamic finance, Islamic banking through digitalization can be enabled. It can be used for the better, and it can be as well achieving and hitting new markets and enabling people. As Mr. Muhammad is saying that uh, like responding to the requests of the Gen Z and Gen Alpha and the digitalization process that is going all around the world and meeting the digitalization infrastructure, this all actually is meeting and creating a responsibility on our shoulders to create such initiatives, to open such markets, and actually to hit a niche and another cap for Islamic finance and Islamic banking. Thank you very much. I'm sure you can socialize over lunch, which is going to start from now for 1 hour. Please be back to the stage by 1:15 p.m. to continue our day with another presentation. Thank you very much and enjoy a good meal. Assalamu alaikum wa rahmatullahi wa barakatuh. Ladies and gentlemen, inshallah, our program is going to start within 2 to 5 minutes, inshallah.
or I am a higher class. This depends on the number of births I will give. So the number of births is the natural increase, then it depends. Okay, the increase of birth rate and decrease of death rate due to the health. This means I'm a well or the highest or middle class, so I'll pay well for the health, so the deaths will be less rate due to the well socioeconomic condition, and then the opposite due to the poor conditions. Okay, let's say that each table is a working group, and I want you to look at this chart and tell me, please, the fertility rate of Muslims in the world and the fertility rate in each region, comparing the Muslim to non-Muslims. What does it mean to have such a number of fertility for Muslim or non-Muslim? Who wants to start? No one. Okay, do you want me to leave? Oh, some people are thinking still. Okay. Okay, so we are comparing two colors, the orange and the blue, in any continent or on the world. That's fine. So the orange one is the Muslim population growth rate or fertility rate, sorry, and the other blue one is for the other religions' fertility rate. So yes, that's right. Would you
We,
please say it again?
yeah, we are outpacing every other religion except in Middle East and North America where we are tied.
Yes, thank you so much. You already analyzed all the charts. So the Muslims fertility rate is yani, outmosting every other religion. Okay, thank you so much. The Muslim demographic growth projections. Okay, so analysis of the recent data on global population distribution and growth projections from 2050. We have here the presence of increase in Europe. Okay, in Europe, in the one, two, three, four, in the fourth line, you can see that Europe, and go to the Muslims. It's in almost in blue, some blue, light blue. It's 10.2%. Okay, this is 2050, and if you remember, it was about 5.9 in 2010. Okay, and for the Muslims in total world will be almost 30%. What other regions also will be increasing too? The Middle East almost the same, it's 93. The Sub-Saharan is increasing. It's increasing from 30.2 to 35.2. And the Asia Pacific is increasing from 24.3 to 29.5. So let's focus on Europe. What is the impact of the Muslim growth in Europe? Would you please have your mobile phones and share your insights about why it would be important or not important? What is the impact of Muslim growth in Europe? Yes, I see that are some answers are coming. Okay. I tell them next. Okay. Lesser resources. What does it mean? Nabiha, what does it mean? Where is Nabiha? Lesser resources, what does it mean? Okay, more Sharia-based financing. Totally right, that's the point. Opportunities for Muslims community regarding the spread of Islam and the Islamic investments. Totally right. Someone wrote why easy. I don't know what that why easy mean. Why easy? Okay, maybe trying to write first. More mosques. Totally right. Okay. Any more answers? Best marketplaces to take initiatives for Islamic financing modes. Risk for Islamic products will increase. Wow, this is negative thing, right? How does how does that happen? Who mentioned risk for Islamic products will increase? Yes, please. Please give the mic.
Yeah, this is because, as is already happening in France, that they are objecting to halal meat or kosher or halal slaughter meat. So they are rejecting that. So with the increase of Muslims' growth in Europe, the conflict will increase, and the
Ah,
and the local population will reject anything that is labeled Islamic or anything that is labeled Muslim
halal.
halal. So that's how the risk will increase.
Okay, we'll be talking about France, luckily. And luckily, the government is supporting the growth, immigration. Yes. And halal, more halal products, more options for Muslims businesses, more requirements increase, demand, more structure needs, big market need, more opportunities for halal, more knowledge on Islamic financing and Sharia compliant resources, source of financing opportunities for non-Muslim population, expansion of Muslim culture, food and clothes, big marketplace and more opportunities. Okay, you left me with nothing to say in the coming slide. So we'll talk about the future opportunities and future challenges. So would you please, next please. Thank you so much. Okay, we'll take that um, first first table from my right is number one. One is future. Two is the challenges. One is future. So please, would you look at me? Hello, please. The first row, this table is one future. So you will barcode will be the future, and then the challenges, then the future, then the challenges. The last row. Is this clear? We'll take 5 minutes and a work presentation for groups, and you will work online together, commenting on each other. Then we'll choose one from each row to present what the group said. Okay? So now is the future. Next, please. The future barcode. So this table 1 and 3 will scan this barcode. 1 and 3 will scan this barcode. Let me know if you are done, any thumbs up or anything. Okay? Next, please. So the coming, next slide, please. The future challenges. Yes, thank you. This is the future challenges. So for table 2 and 4, we'll scan this barcode to share your insights about the future challenges for Islamic economy. We already started that from Professor. Would you please say your name? Yes. Yes, you started this conversation already. It's okay. Your name, please.
I'm sorry if I started that.
No,
My,
no. No, it's okay.
my,
Professor.
my name is Shadab.
Thank you, doctor. Okay, so we already started that. So this is a challenge. You can take it for the second group. We'll go to the challenges. Opportunities. Okay, I can see things coming. Investment products. Okay, digital Islamic banking. Okay, please, if you agree with someone, you can comment on the same comment that it's yes, I agree or something. So we could collect that we are agreeing on this or that. Yes. IB is Islamic banking, right? Okay. Yeah. Okay. Dr. Sayed Imran is very active, actually. Thank you, Dr. Sayed. And your views are very to the point. Yes, I agree with you again. We can have discussions on the table. That's fine. It's a working group, so you can discuss on the table and write what you agree on the Padlet. That's fine. Okay. Wow. Yes, this is actually something that is happening. Yes, taking taking place right now. Have privacy. Yeah. Yes. Yeah. May I see Dr. Said Amran? Who's Dr. Said Amran? Thank you so much. Dr. Irfan is seeming sharing the same ideas with Dr. Said and is very active also. Yes. Thank you. We have another 2 minutes. Now we can agree on some points that this is the highest challenges or this is the highest opportunities. So would like you to make comments to the comments or like to the comments, whatever you would like. So we could agree on what are the highest challenges and what are the highest future challenges and future opportunities. Okay. Okay. Yeah, maybe a text, and maybe they could join the window, Islamic window. Maybe not a text, but it could be an opening their eye to have an Islamic window at least. Restriction to age group for using products. Restrictions for age group. Okay, you owe me an explanation, Dr. Said, for this. Okay, great. So the opportunities you didn't agree, the opportunities, table 1 and table 3, you didn't agree among yourselves which one opportunity is the highest. So would you please agree on which opportunity is the highest together on the already written notes or comments? Okay. Okay, we'll start with the challenges. Could table 2 and table 4 it choose one row not table, it's a row 2 and 4 it choose someone to talk about you and present the results, please. Row 2 and row 4, who would like to present the results? No elections. Laughing, do you want to present or only laughing for? Thank you, doctor. Okay, the mic, please.
I think I have wrote one of the biggest challenge we see in the expansion of Islamic market is the product development of a new products that's very essential for and some people think it's an opportunity but I think it's a challenge because if they don't develop new products they won't be able to compete in a growing market. So new product development or financing in other areas needs to be developed very aggressively by the banks, and technology can play a very vital role in that. And because technology enables banks to basically develop new products, enter new markets with fewer resources and other things, especially AI. When we talk about AI and new product development, that is the area I think it's the biggest challenge for banks to think. And adding one thing is this: I think in this current market scenarios, banks should start thinking like a technology company. If they start thinking like a technology company, then only they can compete in any growing market, specifically in Europe and North American market. And if we talk about those markets, and these are the main markets of the world, and main, you can have volumes and other things are there. So these are the two things which I think needs to be worked out, or they need to think on that. And if they start thinking on this, they can really adhere to the challenges which banks can face in the future.
Okay, thank you so much. Would you like to add other things from the group work? So we are talking about future challenges Islamic economy for the group work.
I think the people which have actually mentioned things are basically covered in what I have already mentioned here.
Yes.
Because they're talking about new product development, they're talking about technology
Yes.
issues which are faced by them. But these are all basically come under the basic things which I've already discussed right now.
Okay.
So these are the things which needs to be addressed. And I personally feel is this, that again I'm stressing on this, technology can play a very vital role. And I still feel that banks in our region, not in the regions we just discussed, Europe and North America, they're not truly focusing on technology or not using technology for the new product development. So these are the things they need to work on. And these are the areas which I think all of the group members have mainly discussed in this.
Okay, thank you so much. May I name your name, please?
My name is Sayyid Qutub. I am the Chief Executive of Al Intisar Solutions.
Thank you so much. Okay, from the row number 4, would you like to present? Row number 4, last row. Anyone would like to present? Okay, thank you so much. Dr. Said Imran, would you illustrate what did you mean with restrictions for age group for using products? Would you please give a mic for Dr. Said?
Bismillahirrahmanirrahim. Thank you so much. Please, can you ask the question again?
You wrote here restrictions for age group for using products.
Yes, here the challenge of new upcoming age group who are going to use the products. Nowadays in Pakistan, we have a restriction of around 18 years when the people got their CNICs and they can start using the banking. Now these challenges.
I didn't hear the age group. What age they are? they can't use?
18, 1-8.
18?
Yes.
Less than 18 do not use internet, or do not use
They
what?
can use the internet, but they don't allow to open a banking account.
Yes, that's right.
The challenge would be for the
Their
Islamic
parents
banking.
or
Yes.
something should be their guardians, because
They
this
can
is.
use the app. The challenge can be overcome if they can use the apps that are
Okay.
available. Yeah.
But do you think this is a challenge?
Yes, definitely, because the growing population is, as long as the population is growing, they get the opportunity to use others means. The conventional banking system will definitely be available to them, as well as the Islamic banking and other products. So
What the age group should be starting to use the
I think it's all about creating awareness and advocacy. Students, by the having some age group of around 12 to 14, they can start
14?
learning. Yeah, 12 to
14.
14 years of age, they have the understanding of what they should do
Okay.
for savings and investments.
Okay, يعني I somewhat agree with you that 14, 15 may be an age, but I think this is related to the regulations and the laws in each country, because a child is less than 18. That's why it is not permitted for him or her to open an account. So their parents or their guardians would do the same thing. And of course, would not be allowed to use the resources and maybe wasting it. So that's why when someone's parent, dad or mom, die, they are asking the court to be replacing them in the financial issues. So I think this is very crucial thing, and I am not a Sharia person, so I cannot take this step in. So thank you so much for raising that, and now I understand your point. Thank you so much. Okay, getting back to the opportunities. Who would like to talk about opportunities from row one? Row one, please. Any interaction from row one? I can see that we have very beautiful ladies here, and I would like to participate, please.
Assalamu alaikum. I am Javeria Rashid and
The mic is not working. Yes.
I am ACCF student.
Not working again.
Hello, can you hear me?
Yes, I can hear you.
Okay, so I was saying that I am Javeria Rashid and I am an ACCF finalist.
Okay.
And today I wrote the opportunity for Islamic economy, being sustainability, green economy, and green practices. Like
Okay.
we have seen in the COVID era that many businesses got flop and did not did well, but the Islamic banks, especially considering the Islamic practices and policies, were able to cope up with the difficult situation. So through research, it is also proved that Islamic practices do provoke and promote the green economy.
That's great. This is an opportunity, and I think it is already going up now. And we can see the green sukuk in Malaysia. We will talk about that also later. Yes, that's totally right. Okay, from the row number 3, who would like to present the opportunities? Row number 3, 3. Yes. Okay, we have in row number 4. Would you please?
Thank you very much. This is Uwais, and I am representing the halal industry.
From which country?
I'm from Pakistan and heading the global halal services.
Okay.
Uh, uh, because the Muslim country population is increasing, and actually, once the population is increasing, the demand of for the Muslims about halal products is increasing, and halal products direct related with the Islamic economy, like product, pharmaceuticals, medicines, even textile and logistic and supply chain services. By the increase of the population of Muslim community, directly increase the requirements of halal lifestyle, which also directly linked with the Islamic economy. And on parallel basis, the banking requirements uh, and the regulatory infrastructure. Once we are talking about the regulatory infrastructure, about the cosmetic halal supply chain and traceability, pharma supply chain, we need to develop the human resource in specifically these sectors. So overall, the halal industry linked with the Islamic economy, and this is there is a lot of opportunity for the Muslims and the Muslim countries and the Muslims businessmen also.
That's totally right. Thank you so much. Okay, we can move from here from the future and opportunities and challenges to the fourth topic. Maybe next slide, please. We're going to talk about the economic and social impacts of Muslim demographic growth. And in this, we are going to have five, okay? And the first four groups will be each line one, and we will start from my right also. So this is group one, group two, group three, group four. Please do not mix. So Dr. Said, please, you are in the group three, okay? Dr. Said Imran? You are in group three. Okay. The first group is effects on production and investment. So this is you. Group one, row one, you will have the effects on production and investments. And group two will talk about the effects on resources and consumption. Group three will talk about the effects on services and infrastructure. Group four, effects on market size and investment opportunities. Okay. Then in the number five, we will all share opportunities. So the four lines will be four groups: 1, 2, 3, 4. We'll start now for about 5 minutes. Then we'll present the major ideas in 4 minutes for each table. So we'll start now with the first group. First group, please. Next slide. Next slide, please. This is the names of the topics. Next slide, please. Yes, this is first group. So would you please scan the barcode? First group. Thank you so much. This is the first group, not the second group. Are you with the first or the second? First or second? Yes. Not here, not here. Okay, next slide, please. So we're now the second group, the second row. Yes. This is group two. So please scan the barcode. Okay. Okay, next slide, please. This is group three, the effects on services and infrastructure. Group three, line three. Okay. Next slide, please. Group four, this is the effects on market size and investments. This is the fourth and last line. Would you please scan the barcode? We have 5 minutes. Starts now. Group one, do you have a problem scanning the barcode? Did you scan it? Do you want me to go back? No? I can see that group 2 is very active. Group 4 is very active. Okay. 2 and 4 is very active. 1 and 3, is there something wrong with the internet connection? Nothing came from 1 and 3. We have 2 minutes left. You could agree on who is going to present. Otherwise, I will select someone. Yes. Okay. Thank you, everyone who's participating. This is very generous of you. 1 minute left. Okay, who wants to present from group 4? We'll start with the last one, which is effects on market size and investments opportunities. 4, last row. Who would like to read the comments on Padlet? Okay, no one is interested. Okay, I read them. We have here first thing, market for halal products and services expands, and investments also, for example, food, clothes, etc. And we have investment in religious infrastructure will increase, market for Islamic banking service products will expand, growing market size in the Islamic economy will attract more global investors, expanding halal finance, trade, and technology sectors. This creates strong future investments opportunities in Islamic banking, halal food, fintech, and ethical investments. We have also the market size has to be capitalized to achieve desired results. Also, the economy needs to be more Shari'ah centric to create investment climate and investor opportunity. Thank you, Group 4, for sharing your insights. Okay, Group 3, who would like to share their notes? Would you like? Yes, please. Mike, where is the mic? The
Now,
first,
effects of on services and infrastructure, we could have handling and managing the huge data,
yes.
infrastructure development and management,
Okay.
continuous provision of the services, high internet and secure connections, and creation of mobile resources and resource mobilization for them is one of the main aspect of the infrastructure challenges.
Thank you so much, Dr. Said. It's almost all yours. Yeah, thank you so much.
Thank you.
Okay, effects on resources and consumption. We have here group 2, starting from Yes, 2 minutes. Group 2 is very active. Thank you so much. Who would like to present group 2?
I would like to present on the effect on resources and consumption.
Okay.
So, first of all, more opportunities will be created in the field of restaurants and clothing.
Yes.
Diversification will be witnessed. And one more thing, it will be a challenge for the government and official bodies in power.
Okay.
And Islamic education and practices will also seem to be spread.
Okay.
That's my idea.
Thank you.
Thank you.
Okay. Group 1. We have only one who commented already. So, linking finance to real assets, promoting risk sharing, and enhancing stability. Okay, can we go to the next slide, please? Yes, here we all will share our experiences, all of us. Would you please, next slide? Yes, thank you so much. This is the social challenges. How can Islamic economic institutions invest in these areas? And then I'll be sharing my insights on also. So would you please, we can all here share the same. 4, 5. Social challenges. How can Islamic economic institutions invest in these areas? This is a moment with yourself to think about how my company or my bank could invest in these areas we talked about already. The 4 areas: the investment opportunities, market size, services infrastructure, resources consumption, and the production and investment. So those are our 4 areas we could invest in. How could this be done? By bringing the IT revolution, technology education, and awareness. Yes. What else? Don't have something else? Advocacy regarding the Islamic banking and its products, counseling and awareness sessions to the public. How is awareness sessions would be as an investment? By raising awareness, people will open other accounts and so on, right, Dr. Irfan? Right? Acc- Accessibility to all the regions for Islamic products. This is how can Islamic economic institutions invest in these areas. Okay, it will be accessible, make it accessible. Support system for all communities, social uplifting of all people, regardless of faith. Any other insights? Okay, it's time now to exchange experience among the 5 groups together. Would you please go to the next slide? Thank you so much. So now you can exchange experience. We would like you to comment on each other's comments if you like it or not, if you agree or disagree with the opinions in the 5 groups we just tackled, making things meaningful and engaging Shari'ah security and growing potential. This will be challenge to be digest accordingly. as soon as possible. Economical sector and the stakeholder come forward and start working on it. For banking sector, they have to make policies and include investments for future. Thank you so much. Okay, Islamic mood of life has to be conceptualized within the economy, then only it will be create an impact. By providing such forums and platforms where open communication between the Islamic scholars, bankers, and common people are made possible. Okay. I can see that you are adding more, but you are not interacting with other comments. So would you agree or disagree with the others? We have only 2 minutes to interact. Okay. Okay, thank you so much for exchanging your opinions. Would you please go to the next slide? Next slide, please. Thank you. Okay, regarding the first topic, effects on production and investments. First, the workforce, as you mentioned, and will increase, and the productivity will increase also. Production of halal products, increase of investment in Islamic finance, increase in government spending on infrastructure also. I think you all agreed on that. Next slide, please. Next slide, please. The effects on resources and the consumption, it will increase in the demand for the Sharia compliant products. Okay, next slide, please. The third group, next 2 slides, please. The third group, the effects on services, yes, thank you, and infrastructure. The numbers and types of infrastructures, like the mosques, someone I think said it this from this line, less diverse and the more homogeneous groups and cities, Middle Eastern culture and existing challenges, the water desalination and food imports, pressure on educational and employment services, and finally, the excessive urban expansion. Next slide, please. The effects on market size, yes, and investments opportunities, the expand of the market for Sharia compliant goods and services, increase investments opportunities in Sharia compliant goods and services, encourages multinational companies to participate in the halal Islamic economy space and innovate products. Now we are going to the fifth and our last topic, which is going to the projections of Muslim demographic growth and its impact, the case studies of Muslim countries. We have 3 Muslim countries, and we'll start with Pakistan. Would you please go to the next slide? And the next, yes. So if we looked at the chart here, next slide, please. Yes, thank you so much. So the projections of Muslim demographic growth and the impacts in Pakistan. The projection of Muslim demographic growth and its impacts in Pakistan indicates that the percentage of Muslim in Pakistan will increase from 96.4 to 96.5, but the numbers are more than this percentage. It's going from 167 million to 273 million. Okay, the total population is approximately now 247 million. The Pew Research Center indicates indicates that the Muslims are 96.5. representing 10.5% of the world Muslim population. In 2010, it is worth noting that there is some reservations that has been raised regarding the accuracy of Pakistan's population figures. However, according to the national census, the population in Pakistan was in 2017 207.5 million, and in 2023 it was 241.5 million also. So it's almost accurate number. Okay, the current services of Islamic economy produced in Pakistan are Islamic banking, Islamic windows, investments, bank accounts, and murabaha, and you can find that on the Sheikh Salah Kamel database, which you have already in front of you. It's a country brochure, all data about Pakistan on the Sheikh Salah database. Okay, the effects of Muslim demographic growth in Pakistan are: we have first, the population growth in Pakistan has led to increased demand for Islamic finance products, with the country emerging as a high potential Muslim friendly tourism destination. And Pakistan's exports to OIC member countries have seen notable. Okay. Okay, sorry. Notable growth across sectors such as halal food, apparel, media, and entertainment, pharmaceuticals. Investment in infrastructure. Finally, we would like to highlight that the government of Pakistan is considering a major regulatory reform to consolidate oversight of food, pesticides, and cosmetics under a single authority modeled after international standards. This is for Pakistan. The second country we will have the Malaysia. Next slide, please. Yes, thank you. For Malaysia, we have the projections of Malaysia to be grown from 63% to 72.4% in 2050. And this is going from 18 million to 32 millions. Malaysia ranks first globally in the Global Islamic Economy Indicator, the GIEI, for 2023, ahead of Saudi Arabia, Indonesia, and United Arab Emirates. The current services of Islamic economy are Islamic banking, the Islamic banking, and Sukuk, Islamic insurance, investments, FinTech, and Takaful. Also, you can find Malaysia and any other country on the Sheikh Salah Kamel database, and it is open for anyone. The effects of Muslim demographic growth in Malaysia are the expansion of customer base, which has contributed to the growth of halal products, food, Islamic finance sectors. There has been increasing interest in the modest fashion and Islamic tourism industries and investment in infrastructure. According to the last report, the 2024 and the 2025 results, it affirms that Malaysia leadership in the global Islamic economy for the 11th constructive year, topping all sectors except modest fashion, where it ranked second. Can we go to Saudi Arabia? Next slide, please. Going to Saudi Arabia, the Kingdom of Saudi Arabia, we can see that the population of Saudi Arabia, is growing also, increasing from 92.7% in 2010 to 93.1%, but also the number is bigger than the percentage. It's from 25 million to 42 millions. And Saudi Arabia holds a leading position in global Islamic finance, as highlighted by Sheikh Yusuf, His Excellency, at the first speech and the welcoming note for this conference. So, and according to the state of global Islamic economy for the last reports, also 2024-2025, the kingdom ranked second in the global Islamic economy indicator for the fourth constructive year. The current services of Islamic economy are Sukuk, Islamic banking, Islamic insurance, investments, FinTech, and takaful. There are other more. You can find them all on the Salah Kamel database. What are the effects of this? We can find the effects are increase the consumption of Islamic economy and halal products. The spending of Muslims tends to be higher during seasons like Ramadan, Eid, and other seasonal occasions. In Iran and Turkey and Saudi Arabia, there is a report that mentioned that the Muslim customer spending on apparel, the modest fashion industry is witnessing significant growth, with Muslim consumers spending on clothing and footwear reaching $327 billion in 2023, marking 3% increase over the previous year. And it was also mentioning that during some hours, and the economy of the night is higher than the economy of the day during Ramadan. Now we are going to talk about the non-Muslim countries, and we have 3 countries. Would you please go to the next slide? The first non-Muslim country that has the highest population size and have the highest number of Muslims as an Asian country, it's India. Can we go to India? Next slide, please. Yes. Thank you so much. The projections of India, it projects that it's going from 14.4 to 18.4. It's from 176 million to 310 million Muslims. The current service of Islamic economy are mediation in shares, investments, microfinance, bank accounts, and murabaha. Also, India represents a potential market, as you mentioned earlier, for Islamic finance services, as it is the non-Muslim country with the expected highest number of Muslims. The effects of Muslim growth in India, it will be shape the future workforce, the production and consumption, of course, of the Islamic finance products, education and the skills development, social economic integration, investments in infrastructure. The second non-Muslim country from Africa, and it was the high population, it's Ethiopia. Would you please go to next slide? Thank you. Thank you so much. Okay, for Ethiopia, the projections are coming from 34.6 to 39.9. It's almost 40% in 2050. This is going from 26 million to 57 million Muslims. The current services of Islamic economy are investments, microfinance, banks, bank accounts, murabaha. The effects of Muslim demographic growth in Ethiopia are future workforce also, and production and consumption of Islamic finance products, urban migration, education and skills development, social economic migration, integration, investments in infrastructure. For the third and last country, as promised, France. Could we go to the next slide? Yes, thank you. So the projections of France is coming from 7.5, and this is the highest Muslim rate, as Dr. mentioned already earlier. It's the highest Muslim rate in Europe. So France is coming from 7.5 in 2010 to 10.9, and it will be also the highest in 2050, from 4.7 million to 7.5 million Muslims. The current services of Islamic economy in France are saving and investments, home financing, and retail. The legal adjustments of the tax policies, admission of listing sukuk on a French regulated market, and the tax treatment of Islamic financial transaction, ijara, and murabaha. In addition, France represents a potential market for Islamic finance services due to both the Muslim demographic growth and the willingness and support of the country. And even if there is some clashes, as you mentioned, Professor, but it's still promising. The effects of Muslim demographic growth in France are the future workforce also, the production and consumption of Islamic finance products, increased tax revenues, simulation of the local economy, investments in education and skills development, and finally, the social and economic integration. Those are our three non-Muslim countries. And coming now to the final recommendations of the study. Would you please go to the next slide? Yes, please. Thank you so much. Now we are going to talk about the strategic recommendations for the Islamic economic executives. First thing is leverage the demographic dividend by investing in youth training, entrepreneurship, women economic participation. This is very important. Innovate, innovate Islamic finance products, as mentioned from doctors here, to serve low income and young populations and expand digital financial inclusion. Then target high growth Muslim markets like India, Nigeria, France, whatever, with tailored halal goods, services, and partnerships. Support smart urban and social development through investments in education, healthcare, and infrastructure aligned with Islamic values. Adopt data-driven planning by building demographic analytics until units and collaborating with research institutions for informed strategy. Would you please go to the next slide? Our concluding remarks. Next slide, please. Thank you. The population growth achieves sustainable development through effective management and planning. The population growth of Muslims supports economic growth, especially through Islamic economic products. Supporting economic growth through improving infrastructure and encouraging investments, including Islamic economic products. And that's all from my side. I would highly appreciate sharing your insights about the workshop. Would you please go to the final slide? This is a feedback, final slide. Feedback survey. Would you please scan the barcode? And I promise this is the final barcode. Yes, thank you so much. Would you please provide me with your feedback? We have 5 minutes. It takes only 2 minutes, but I'm giving 5 minutes for all the people. So it takes only 2 minutes or less. So please give me your opinion, feedback. I received 3. Thank you. Thank you so much. I'd like to hear from you your insights. Thank you. Okay. Another 3. Okay. Thank you so much. We have 12 only of all the attendants who filled the questionnaire. It takes less than 2 minutes. So please fill in the questionnaire. Your feedback is very important to improve things. So if you see something that it should be improved, you should highlight that. Thank you so much. Okay, the number is increasing. Thank you. Would you please go to the last slide? Next slide, please. Yes, thank you. So this is our contact. No, the one before. Okay, thank you. We provide the workshops in a full day interactive and tool hands-on using the on-job training with the participants only for 20 per one workshop. So it's more interactive, and I'm not giving like a lecture from here, and it is not online. So we interact all together as a workshop, hands-on on the tables together in a full day shape. And if you want to reach for any more information about that, please reach us on this Strategic Thinking Center email. Thank you so much for being for here and for bearing with me for the final words. Thank you so much, much appreciated. Thank you, Doctor.
Thank you very much, Dr. Iman Shadi, the Executive Secretary of the Strategic Thinking Center. I hope that all of you has enjoyed this presentation. It was an interactive presentation on the demographic growth and Islamic economics expansion. And last but not least, as we are approaching the end of our day, however, we would love to hear a closing remark, and it is a special note to be addressed to one of the Sharia scholars in Pakistan to talk to us about the evolution of financial fatwas in Islamic banking toward enabling green economic strategies. Please join me in welcoming to the stage Mr. and Mufti Muhammad Khalid Hassani, member of Sharia Board of AlBaraka Bank, Pakistan. He's still coming from the end of the hall, so
Can you move? Oh. Okay. 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 Oh. Bismillahir Rahmanir Rahim. Distinguished guests, respected scholars, and dear colleagues, Assalamu alaikum wa rahmatullahi wa barakatuh. I would like to sincerely thank the AlBaraka Forum for this kind opportunity to address such a distinguished gathering. I stand before you not as a distinct expert, but as a fellow researcher and a student of Islamic finance, deeply interested in a critical convergence, the ethical guidance of our faith, meeting one of the most pressing needs of our time, the sustainability of our planet, which Allah subhanahu wa ta'ala had entrusted to us as Khalifa. وَجَعَلْنَاكُمْ فِي الْأَرْضِ Khalifa. I know that the second day you have already to rich discussions and valuable insights from senior Sharia scholars, and many of you feeling tired. So I will try not to make much of your time, just few minutes, and we explore together the evolution of financial fatwas in Islamic banks towards enabling the green economic strategies. Can you move forward? Next slide. Okay, sure. To understand where we are going, we must first look at where we stand. We often think of fatwas strictly do's and don'ts. Is this contract halal? Is this profit Sharia compliant? But as we enter this digital sustainable age, a new deeper question has emerged. Is this investment good for our earths? Today, inshallah, I will try to highlight mainly these questions and how our Sharia boards are moving gradually and thoughtfully from a primary focus on the legal and juridical form of transactions towards a broader focus on their ethical impact and long term consequences for the creation. But before we discuss the evolution of fatwas, let us remind ourselves of the bedrock upon which we stand, a fundamental principle that has always been at the heart of our deen. Can you move next slide? Before we speak of the fatwas, let us remember our fundamental covenant. Islam has always defined our role as Khalifa, as I mentioned in the Quran, says, وَجَعَلْنَاكُمْ فِي الْأَرْضِ Khalifa, I stewards and vicegerents entrusted with the earth. The Quran instructs us clearly in Surah Al-Araf, أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم ولا تفسدوا في الأرض بعد إصلاحها. I do not cause disorder on the earth after it has been set in order. This is not merely advice, it is a direct command against fasad. After Allah has established Islam, a order and balance in the world. Scholars explained that this verse prohibits all forms of disruption in the natural order, whether through waste, pollution, or exploitation, because the earth was created in perfect proportion in harmony for humanity's benefit. This principle is now not new to us. Our religion has always promoted the prohibition of israf in all things, the concept of hima, protected reserves for natural resources and wildlife, intergenerational justice, ensuring we leave a livable, prosperous world for those who come after us as part of our amana trust. Islamic finance built firmly on justice, transparency, risk sharing, and social welfare is naturally aligned with sustainable development. For many years, however, our focus in Islamic banking remained primarily on ensuring transactional compliance, which we may call a juridical compliance, fiqh-based compliance, avoiding riba, gharar, and maisir without explicitly addressing environmental impact. This is now changing. The fatwas are evolving to meet the challenges of our time, not by altering Sharia, but by applying its timeless maqasid more comprehensively. Next slide, please. So the context has changed now. The climate crisis and ecological degradation are no longer distant concerns. They are financial, social, and existential risks, and our guidance must evolve to meet this reality. This is where the profound framework of Maqasid Sharia articulated by our grand Sharia scholars like Imam al-Ghazali and Allama Shatibi rahimahullah, give us our compass. They have taught us that the ultimate aim of Sharia is to secure human welfare, masaleh, and prevent harm, mafasid. They crystallize in the five essential objectives, which are very well known to all of us. I have, Hifzul Deen, Hifzul Nafs, Hifzul Aqal, Hifzul Nasl, and Hifzul Mal. For our discussion today, two of these are particularly relevant and are intimately connected to our discussions. Hifzul Nafs, protection of life. When we speak of the green economy, clean air, safe water, stable climate, reduced pollution, what are we protecting? If not human life itself from the harms of environmental degradation. And Hifzul Mal, protection of wealth. When we speak of sustainable development for the future generations, preventing resource depletion and building resilient economies, what is that? If not safeguarding wealth and prosperity across time. Therefore, driving the green economy is not a new side project. It is a direct fulfillment of our objectives. Environmental stewardship is not an elective, it is our amana, our sacred trust from Allah subhanahu wa ta'ala. So, this principle is the why. Now, with this foundation in mind, let us look at the how, i.e., the evolution of the fatwa itself, how financial fatwas have evolved historically to embrace this responsibility. Next slide. The classical paradigm. So, with this foundation of Maqasid al Sharia in our minds, let us trace how financial fatwas in Islamic banking have actually evolved over the decades. We can see this evolution in two phases. There are three phases, but we can see two phases. One is the first phase, indispensable era of validation, a form based compliance. For several decades, the primary role of a financial fatwa was to act as a gatekeeper. The core question was, how do we create a banking system free from riba while remaining viable in a conventional world? Sharia boards focused on ensuring that transactions were free from riba, gharar, and maisir. We looked at the form of the contract. We asked, is the murabaha structure correct and Sharia compliant, and is the ijara contract valid? However, in this traditional phase, the green element was often silent. A financing facility for a massive industrial project might have been perfectly compliant in its legal structure, and legal I mean juridical fiqh structure, even if that project was contributing to significant carbon emissions or ecological destruction. Because we were focused on the purity of the transaction, we sometimes overlook the impact of social sustainability. Sustainability. Not because the social impact was unimportant, but because the industry was fighting for its very existence and the basic compliance. But a system built on justice, welfare cannot remain static. As the industry matured and global challenges like climate change became undeniable, the focus began to shift from purpose to permissibility to benefit. As the digital age provided us with more data on climate risk, our Sharia scholars began to ask, is it enough to just avoid the haram, or must we actively pursue the tayyib, the pure and good? This led us to the evolution we see today. Next slide. The next major step in the evolution of financial fatwas emerged with the institutionalization of Islamic finance. As Islamic banks and financial institutions were established, fatwas could no longer remain individual and ad hoc. This led us to the formation of Sharia supervisory boards tasked with ensuring that products, operations, and policies were compliant with Sharia principles. The fatwas are now operated with a structured governance framework almost in all the Islamic countries. addressing product design and approval, documentation and contracts, ongoing Sharia compliance and audit. Institutions like Islamic Financial Services Board, IFSB, and EU fee standards helped harmonize practices. During this phase, we began to see the first point of broader ethical considerations. Some fatwas started emphasizing transparency, fair treatment of stakeholders, and avoidance of harmful industries like tobacco, weapons, pork. Social responsibility entered the conversation through concepts like zakat distribution and qarz hasan. Yet environmental impact remained legally implicit, mentioned under general maslaha or avoidance of zarar, but not yet a central focus. It is fair to say that the dominant concern during this period remained compliance focus. The primary question continued to be, is this product Sharia compliant? Broader questions of social and environmental impact were often assumed rather than explicitly examined. Today, however, the expectations from Islamic finance are evolving once again, leading us into a new and more oriented phase of financial fatwas. Next slide. Next slide. Yes, this is sustainability phase. The turning point came as the world began to recognize the severity of the climate crisis, rising temperatures, extreme weather events, loss of biodiversity. These are not distant threats, they are realities affecting millions today, particularly in vulnerable Muslim majority countries, especially Pakistan. Around the same time, the United Nations adopted the Sustainable Development Goals and the Paris Agreement on climate change was signed. The global community, including the Islamic finance industry, could no longer ignore these issues. Islamic banks and Sharia boards began asking, how can we contribute to solve this crisis while remaining true to our principles? This question sparked an evolution in Islamic finance fatwas. We are seeing a new generation of financial fatwas. Today, Sharia boards are increasingly looking at positive screening. It is no longer enough to just avoid a coal mine because of its financing structure. We are now seeing scholars actively encouraging and certifying green sukuks and sustainable finance. In this evolution, the fatwa is becoming a tool for value based intermediation. We are asking, does this project reduce carbon? Does it not cause the harm to the environment? Does it protect the water supply? If the answer is no, then even if the contract is technically perfect, juridically compliant, is it truly fulfill? We are still asking, is it truly fulfilling the maqasid objectives of our faith? We are now entering the second phase, the era of impact. The core question has evolved. It is no longer just, is it halal? But now, is it tayyib? This question. While halal tells us what is permissible, tayyib asks if something is wholesome, pure, and beneficial for society and not harmful. In this phase, the role of fatwa transforms. It moves from being a gatekeeper to become an architect and a guide. It lends its widens from purely juridical compliance to maqasid driven compliance. And here is where the retail age, the theme of our conference, became our greatest ally. In the past, scholars didn't have the data to judge environmental impact. But today, through FinTech and digital reporting, a Sharia board can see the real time impact of an investment. The Green Fatwa of today is data driven. It uses digital transparency to ensure that even we call a fund sustainable, it truly is. We are moving from legalism to impact consciousness. Next slide. No, previous one. Fatwas and the green economy. Yes. This evolution from compliance focused to sustainability driven has produced one of the most promising innovation in Islamic finance, Green Scope. And it is creating powerful new tools for our industry. Let's look at how evolving fatwas are actively enabling the green economy. Sharia scholars are now issuing fatwa that explicitly incorporate environmental and social criteria. The green sukuk is the perfect example of the evolution of the fatwa. To issue a green sukuk, Sharia scholars had to go beyond traditional jurisprudence. They had to collaborate with environmental scientists and ACG experts. Several Sharia boards now issue fatwa that include ESG criteria, environmental, social, and governance factors. Companies are screened not just for haram activities, but also for their environmental footprint, labor practices, and corporate governance. And our screening processes have long excluded business involved in haram activities. The evolution fatwas are now guiding the inclusion of environmental, social, and governance criteria into that screen. So a company might pass the financial halal test, but a fatwa informed policy could exclude it for causing severe environmental damage or social harm. This actively upholds Hifzul Nafs and Hifzul Mal. Perhaps there is not much more practice in our country, in Pakistan, but there is, especially in Malaysia, our Malaysian brothers can confirm this. Uh, they have in their Islamic banks a special department, a social finance department. The resulting fatwas and did something revolutionary. They tried Sharia compliance to environmental performance. If the proceeds of a green sukuk are diverted away from renewable energy and into a floating industry, the instrument loses its green certification. And in the eyes of the modern scholar, it risks losing its tayyib status as well. We are seeing this momentum across the Muslim world, from Malaysia's the first green SRI sukuk to the Indonesia, the first sovereign green sukuk, and to initiatives right here in the GCC as well. So these instruments are funding solar parks, waste management systems, and sustainable agriculture. By issuing these fatwas, our Sharia boards are not just saying yes to a contract, they are actively enabling the green economy. They are channeling the enormous liquidity of the Islamic finance industry toward the very projects that will save our planet for our children. Next slide. Sharia boards from gatekeeper to strategic builders. This evolution in financial fatwas reshaped the role of Sharia boards. While the traditional function of ensuring compliance remains essential, the expectations placed upon Sharia scholars are gradually expanding. Today, Sharia boards are increasingly viewed not only as gatekeeper but also as a strategic enablers, providing ethical direction for innovation within Islamic finance. I hope our State Bank of Pakistan is also initiating some programs as well. Responsibilities include offering guidance on emerging financial structures, encouraging products that deliver social and environmental benefits, ensuring that innovation remains anchored in Sharia values. In this sense, Sharia governance becomes a constructive partner in institutional decision making, helping align profitability with purpose. A maqasid oriented approach also encourages Sharia boards to adopt a long term perspective. By factoring these considerations into fatwas and guidance, Sharia boards help Islamic financial institutions create sustainable value, not only financial returns. Last slide, the way forward. Allow me to conclude with a brief reflection. The future of Islamic finance does not lie in choosing between compliance and sustainability. It lies in integrating both within a maqasid driven framework. Financial fatwas, when approached proactively, can help guide Islamic financial institutions toward activities that are not only permissible but meaningful and beneficial. This requires closer collaboration between Sharia scholars, regulators, industry practitioners together. They can ensure that Islamic finance responds thoughtfully to environmental challenges while remaining faithful to its ethical foundation. The path forward requires courage from three directions. First, it calls for ijtihad from our respected Sharia scholars to continue issuing forward looking guidance that addresses these complex modern challenges within our timeless framework. Second, it requires commitment from our financial institutions to actively bring these green and ethical challenges to their Sharia boards and to develop the products that serve this higher purpose. And third, it demands choice from us all as professionals and customers to seek out and support financial practices that fulfill this complete vision of our faith. Let me leave you with a final foundational verse from the Quran from Surah Hud. Allah subhanahu wa ta'ala says, هُوَ أَنشَأَكُم مِّنَ الْأَرْضِ وَاسْتَعْمَرَكُم فِيهَا. It is He who has produced you from the earth and settled you there. The word used here for settle you is istamarakum, from imara, the subject word from imara, which means to build, to cultivate, to make flourish, to prosper. We are not mere passengers on this earth. We are not renters. We are its builders, its cultivators, its stewards. We have been entrusted with its imara. Thou the evolution of our financial guidance through fatwas that care for both profit and planet. We have one of the most powerful tools to live up to that divine trust. This is our amana, and now we have the compass and the tools to fulfill it. Jazakumullah khair.
Thank you very much indeed, Sheikh Muhammad Khalid Hassani, for this great and insightful closing address. And by this great participation, we do come to the conclusion of our day. We do respect and appreciate so much your time and your patience waiting and participating with us, making this day countable. Please scan this QR code for us. This QR code will take you to an evaluation sheet. In this evaluation, it would be an evaluation of the conference. You can write to us your opinion. What do you think about it? What do you suggest for the future and better improvements? Thank you very much for this time. Thank you for being here with us in Karachi. And by this, we conclude this conference and looking forward, inshallah, to see you again and again, and the closest to be in the first half of 2027. Thank you very much. Looking forward to see you again. Stay well. Have and enjoy the rest of your day. Wassalamu alaikum wa rahmatullahi wa barakatuh.